The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Dow's down 1.12 at 20,836, just off the all-time high, 20,851. S&P is down 2.5 at 2367. The comp, oops, let me just move this away so that I can get the right thing. Okay, the comp index is down 18 at 58.43. Gold is down 1 at 12.57. Silver is up 0.05 at 18.47. Crude oil, and that's going to be interesting, down 61 at 53.44, stuck in that trading range. And we've got bonds up 3.30 seconds at 125.08. Now let's go to the dollar, and then we've covered a bunch of things right here. Dollar is down 26 cents at 100.86. All right, now this is what we need to do. First of all, thank you to all our hosts. Great programming. Hopefully we can keep that standard up, and we're going to go right through the day. What is today? Today's Tuesday. Full house today. After me, you've got, the guys are at the New York Expo. I completely forgot about that. I was in New York this weekend. I might have even stayed an extra day or two. Anyway, so that's great. This is Think or Swim, and you got Kevin Hanks, and wow, what an option show this should be. This is right on the cusp of what happens after the talk tonight that the president gives to Congress. We'll see what happens tomorrow morning. The next thing we're looking at here is that within the context of the E-mini, down only $1.25, it needs to get above 2370.50. It's at 2367.00 right now. What I'm going to do, I want you to do this live. I've done it elsewhere, but I'm going to do it live right here. Under every other circumstance, based on the technicals that I'm looking at, I would start to draw an arch formation. You know, that's what I like to do, the arch formation or cup formation. And I'd put it in on the right side with a dash line. And the reason being, you see the slowing of the move higher? The way that the momentum is slowed down? Look, peak E on the E-mini. 2365, round number. 2 days later, leg F goes to 2367.50, just slightly higher, pulls back a day, another day higher, and a very quick peaks EFG or ABC is an alternate count, takes you to 2370.75. We haven't yet taken that out. So it's going to be very interesting, because what I'd say to subscribers is that we are still in a Chapman Wave 5. We haven't concluded the 5 yet. So that's one of the techniques we're looking at for a potential toppy formation. If you look at the Dow, let me go to the 120, then we'll go to the daily. If you go to the Dow 120-minute chart, Dow 120-minute chart right there. I put them one behind the other so I can do this very quickly when the market's closed, and I can quickly calculate and retab. Same thing, leg 5. Held the 9-period exponential moving average at 20,815. This is the Dow. But the MACD on the right chart, these are the same charts. They don't look like it, but they're actually the very same charts. And look at the one on the right. Look at the number of green bars. I will talk about the Dow in a moment for green bars. That's incredible. But look at this. Let's rather say, how many red bars have there been? This tiny little candle right here on the 22nd of February. Tiny little candle, 2781 high, 2764 low. Was it a 17-point range? That was unbelievable. That's a 120-minute chart on that bar I'm talking about, of course. But look what's going. Wait a minute. Wait. Yeah, that's right. So we were looking at this, and now you can see from the low that was made back on the 17th at 1:30 in the afternoon, that green bar, well, the low was just before that on the 17th at 20,532. We've had 1, 2, 3, 4, 5, 6, 27,449. 20. So, okay, that's just 1 point lower. So let's do it again. 1, 2, 3, 4, 5, 6, 7, 8, 9, 12, 13, 14, 15, 16, 17, 18, 19. Today will be the 20th. Call the candle 20th. This is 20 candles, of which only one has been ugly, and all the rest have just been nominal pullbacks. Isn't that incredible? Now, we have seen that in the 120-minute chart before, but not the way the Dow looks. Look at the way the Dow, sorry, not the way the daily looks. Look at the daily. This is incredible. Let's get another daily right in there. So here's daily. This is leg 5 in the Chapman Wave 5, same as you saw in the E-mini. If there was no talk tonight to Congress to see whether or not the market was going to spiral higher on optimism or whether it was going to pull back, if it was just a regular day, today would be the day that I say, leg F, if there is a peak F, there's a real good chance that within 2 days we'll be testing 20,710, the 9-period exponential moving average in the daily. So this is an unknown about an unknown. Although it's really not, because what is the president going to do? He's going to talk about how difficult healthcare is to get something equitable for everyone. Okay. He's going to talk about the wall. And he's going to talk about bringing jobs back. Well, we've had 3 months exactly since the election. Well, I shouldn't say that. It's almost all of November, December, January, and almost all of February. I'm sorry, almost 4 months. And the market has gone up with very little tactile, very little change that's actually happened. Other than promises, anticipation, and all that, very, very little has happened. Well, if that's the case, then what we're looking at here is a situation where looking at this as an overbought level, it doesn't say that you have to crash, but it does say that at some point you will see the Dow and the S&P start to chop within a range of limited upside, probably slightly lower lows to the downside before any more serious a decline occurs. Just wanted to get that out the way. Now, within that context, the MACD, the moving average convergence divergence, you can see by the histogram, is just starting now to close the gap a little bit, but it's still very wide. To go from this level here, the green 9-period differential, to the red slow-moving average would take a decisive slide below 20,710, the 9-period exponential moving average, that purple-colored one on the right. These are the two same charts, but look at the greens. Just look at the greens. It's incredible. We're looking at, let's do this. From the low that was made on the 2nd of February, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, and we haven't yet got 13. 13 huge green candles, mostly huge green candles, and a couple of tiny little red, almost doji type candles. This is saying that the market has had an incredible upside momentum. You can see by the MACD. Stochastics at 97.82. That's only at 1.18 away from 100%. This is incredibly high. If you look out, the only way this can go is lower. That doesn't mean to say the market has to crash. It just says the stochastic at some point is going to start declining. We'll talk about this because this is such an important couple of days coming up, and I'll explain why I am somewhat cautious, ready to add to the cautious side in a moment.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. A couple of things. I had a number of questions. I want to get to everything because they're really, most of them are very good questions. So this is what I'm looking at. Let me go back to this right here. Yes. So let's go. Danny in the Den asked me, are we still long our GDX position? No, we're not. We got taken out yesterday. Very nice profit. And we got taken out in our gold stock as well for a really good gain, 26% or something. I'm wanting to re-enter, but I think I need to take a little time here. I need to assess the dollar. So let me just say the GDX now is up 37 cents at 23.21. Yesterday was a really ugly candle. And if you talk volume, it had volume, and it went down and closed almost at the lows at 22.73, closing at 22.84. So we're now out, but at the same time, the weekly chart, the MACD is holding well. The stochastic's still at 83%. I'm going to be watching this. I might have to pay up for it. I don't know. I would prefer to see. Let me just do this. I want to give the relationship. See. The dollar is not screaming to the upside, but it's holding within that rectangle area. And you remember I said back in the 99s, there's real trouble for the dollar. But if it can hold steady here and maybe get to 101.30s, what was the high today? 101.26. Yeah, 101.30s. Maybe I prefer, of course, 101.50s. Then we could see the peak C1, C2 with the MACD still strong, stochastic kind of weak. In the daily, we could see that the weekly is in the sideways chop, chop, chop area. Let me now get rid of this because that's what I'd said that I was expecting quite some time ago. Now what we've got is a pattern that's, if you take too long, you see this pattern right here? If you take too long to break to the upside and just go sideways, the arch formation, the H pattern kicks in. So yeah, let me just analyze it in my own way, just real briefly. The dollar goes under 100.50. I think gold starts to move higher. That's number one. Number two is I still think that gold, in considering gold as an asset, and let's call it just call it a financial asset. It's in the asset of the fear factor. There's a fear factor on two counts. One is the Fed is desperately trying to get inflation. And believe me, in some areas they really are, but not the way they're still counting it. In another area, it is a fear factor because there is an unknown about the unknown. Usually you have the unknown. You say, well, I think such and such can happen. At this particular point, with this particular president, I think it's part of his modus operandi. We have an unknown about an unknown. Now, what do I mean by that? We have an unknown about the inflationary aspect because there's been no real talk in the administration about cutting. Let's put it this way, cutting programs that are significant. I don't mean just cutting the arts or something like that. I mean really big cuts, like in defense. So there is going to be an increase in the defense spending. I'll talk about that maybe a little later in the week. The irony of these whole things, that in defense, when President Obama came in, it seemed to some of us, at least to me, that, whoa, we've got to be a little careful here because the whole defense area could tank. What happened? They had the most fantastic percentage gains ever. They're still holding pretty well. So maybe during the defense goes down. The defense stocks don't rally so much. But if you want to look at Boeing, whoops, I'm going off on a tangent here. Boeing, look at Boeing. Unbelievable, all-time high at 181.20, and talk about that even if they lost a huge chunk of their businesses right now, they still have excess capacity, except we know that in the airline industry, when the market eventually turns around, all those orders just get canceled. Canceling 8, canceling 20, canceling. At this point, everything's in line. Boeing looks fantastic. Very much parabolic in the weekly and monthly. Of course, certainly in the daily, but that can hold very well. We'll see. This is going to be very interesting going into a week from today, Tuesday week. Let's see if Boeing is at 183 or if it's testing 175 support. My guess is it's probably going to be down to 175s. So let's go back. So I want you to put that into, Danny, I just want you to put this into the context of inflation. So if I'm looking at gold right now is down 1. So this is very good action. But look at the candle that was made at leg D yesterday. With the MACD good, but arching over. The stochastic very good at 89%, but the fast-moving average starting to turn down. On-balance volume is failing. I would not be surprised if gold actually has a bit of a pullback. It's had a spectacular move since the low of December at 1127. It's gone to a high. The high yesterday of 1260, was it? 1264.90. You know, that's pretty damn good. So I would not be surprised if this is a peak E in the 120-minute chart made yesterday on the 27th at noon, and this pullback is just suggesting that gold could have a little bit of a pullback. And if you look at the GDX is the actual gold miners. These are the equities. They're not acting all that well. And let's just look at GG. It's a good one to look at. Gold core made a peak D in the daily chart, a peak B in the weekly. Yeah, this says be a little careful here with gold. It could be pulling back. The weekly and monthly are still looking very good looking out, but shorter term, it could pull back. Good. I hope that helps you. Now, I need to look at, let's go back to the dollar DXY. I want to put into the context of the EUR USD, the euro dollar currency pair. See, the dollar is not acting very strong. I still think it's in a consolidation phase. If you look at the EUR USD, leg B could be 106.30263. Yeah, this could be a peak B if there's no new high today. But what I really am looking at is that the weekly chart is suggesting that the down move is still underway, but within that is a test of internal strength. And the internal strength is suggesting that the daily MACD is trying to turn up. There's a positive divergence of the stochastic, but we haven't got the price movement. And I said this the other day, until the euro can get above the 1.067 highs of February the 17th and 18th, those candle highs, I think it's just kind of stuck here for a little bit. So that's really what I'm looking at. And the support has to hold today's low. A close under 1.05643 is a negative. So I think the euro is showing us that it's got dollar is showing us that it's got some strength to it, but a lot has to happen in the technicals to be able to support that strength. If you look at the USD JPY, this is the dollar Japanese yen, it's pulling back. And just like, how can I put this? The peak C1, C2 that we saw in the weekly chart, the same kind of parameters are unfolding here. If the Japanese yen dollar currency pair at 111.99, if it breaks under 111.77, let's call it 111.75, there's a real good chance that not only will there be a test of the low of the 7th at 111.58, well, of course, there will be. But there's a real good chance that the weekly chart is going to continue negatively. And my look at the weekly chart of the US dollar, Japanese yen suggests that there should be lower lows to come. We'll look at the TLT in a moment, and we'll look at the volatility index. Dow's down now, down 5, and the S&P's down 2. Here's the 120, there's the 10-minute chart, show you the parameters. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So a couple of things happened during the break. I had a couple of emails, a couple of questions. I think I want to get to. Let's just run all this real quickly. First of all, there was a question about TIP. It's something that I had last year. I think I said to subscribers, let's buy this because the Fed said they want inflation. We bought it and we made a little bit of money, and then we got stopped out. And I said, something's wrong with this picture. iShares TIPS bond ETF. The history that I can recall is that every time it was discussed, it was discussed in the sense that it was an inflationary indicator and an ETF that picked up on inflation. And I've thought of this for years and years and years. And then the more I looked at it, I said, it looks just like any other bond ETF. It's doing the same thing. It's acting the same way. Well, it has gone from the 111 area to 115. Okay, so that's 4 points, 4%. Yeah, okay. But actually, I still think that it isn't representing inflation per se. It's just a bond. When bonds go down, the yields go up. So it's treated more, I think, as a yield. So all I can say is trading at 140.67 has made a peak D. I think it's kind of stuck. Now, funny, it's just a pure coincidence. You see this, the move that's occurred since the 12th of January, this rectangular move with a slight move above to test the 200-period exponential simple moving average. Well, have a look at that. So in other words, I don't think that it's really. I'll go into it deeper. I'm just saying I don't think it's really an inflationary way of looking at the market. In other words, it's not a gauge of inflation. It does represent something else. It really represents bond yields more than anything else. Okay. So bond yields. No, wrong way around. TNX.X. TNX. Sorry, I wanted to make sure that I'm just talking. Oh, I thought that I had it upside down. It represents bonds. It's rallying like bonds. There are. Here's the yield. Here's the yield making the H to an M pattern. Phew. I wanted to just clarify that. All right. Now so in other words, I can't give you anything with a tip other than to say my tip is, if you want to hold it as a kind of as if it was a yield fund, that's fine with me. Okay, just that's the only way I can do it. Next question from Kenneth in Denmark was, could I look at IPI? Well, I haven't looked at IPI for a long time. I have looked at POT, which is potash. This is Intrepid Potash Inc. And the reason why I thought it was so cute is, look, this is the same pattern that we're looking at. This is the pattern of the TNX. Of the yield. Look at that. Isn't that funny? Okay. Trading at $2, down 17 cents. I know that this is the kind of stock that would be great if you combined it the $2 and you load up on it, even if it's just a small part of your portfolio, but you load on it in the number of shares, and boom, it goes up to 3. You made 33%. I'd be a little careful. I think it's stuck in a range. If you want to buy it between the low that was made of 175 twice. You want to take a chance. If it pulls back to 180, you can have a 174 stop, because this is what's held before. And then that's the way I trade it. I treat it as an option, and that's it. I can't give you anything right now based on it in terms of the strength. I'm looking at weakness more than strength in the daily. Even the weekly chart is the same, and so is the monthly. I'd be real careful. This thing could go to 0. So just treat it as a quick trade if you do it. Okay, hope I helped you there. Yeah, and the answer is yes. You can use your Tiger dollars to buy my CD book introducing the Chapman Wave methodology. Absolutely. And then let me know if you have done that, because I can give you a couple of pointers. Okay. Do I have time to we did that. Okay, the next thing. So Bob, I don't know if he was looking at options, because he usually does options. So it was on Ross Stores. And what he said was, on retail, look at Ross for retail. I just noted earnings in a few days, a rather repeatable run-up into earnings. Oops, missed the routine run-up. Bob, you do this much better in options. I'm just going to say to you, I did the daily very quickly. If the earnings are coming out, the way it looks like it's 68.49, down 65 cents right now. If there is any disappointment, this thing could just plummet below 67.52 in an eye blink and get into that very strong candle. I say get to the doji candle of the 7th, higher in the 66s. It could happen really quickly, just based on what I'm looking at. If it's going to be successful, and if you're playing the calls, wow. This thing needs it needs to be fabulous, a real surprise, an upside earnings surprise. If it was me, and I'm not, I know that you've done this very well, so I'm not going to say if it was me, because it wouldn't be me. I haven't been done this for a while. I would probably be playing the put side rather than the long side. You're probably going to be playing the long side. Hey, remind me when the earnings come out to see what happens. But I'm just saying to you, those are the parameters. An aftermarket, if it's before the opening bell, when the bell starts, if it's up 1.5 points, that's fabulous action if it holds. But if it is down over 1.5 points, that's a real problem. And it's a problem looking out for a couple of weeks. Hope that helps you. Next thing is, GT wants to know about Schwab. So look, SCHW is a stock that I do want to be looking at. SCHW is a stock I do want to be looking at, but not now. I want to be looking at it for what I think is the next big surge when the public comes in, because the beneficiaries will be Ameritrade, Schwab, all the brokerage houses will suddenly pick up, and I think they'll do extremely well. But right now, it seems to me they're telling us a little bit about the market, and Schwab down $1.77 to $39.95. I think there's a lot of competition. I see Affinity just sent out an email saying they're lowering their prices for trades. I mean, competition's intense. So I'm not sure how all these guys are going to make money in the end. But in the meantime, Schwab, I would not be doing anything right now. I definitely would wait for a test of the 39 to 38s over the next week and a half. Personally, I'd like to put it on my radar and say, Schwab, SCHW, you go back to the 36s, somewhere around there, maybe 35s. I'm going to become very interested. Just like Johnson & Johnson, I say to subscribers, fantastic move to the upside, doing all these pivot points to the upside based on trendline resistance. Look at that. Beautiful resistance, goes right to it and stalls. Let's see how it holds. I'd probably be looking at it at 119 to 118 and say, hey, defensive area, which takes me to the very next question. Let's see. Not quite the next one. Okay, Julie wants to know XLP consumer staples. So in it, she has XLP. She has, oh, so look at that. That is so interesting. Trading at 55.19, up 16 cents. Oh, wow. All right, the break is about to come. I want to update my notation on this in the daily. I want to talk about it because she asks about Procter & Gamble and others, time to move into the defensive area. Let's talk about that as soon as I get back. Basil Chapman, Tiger Technicians Hour, Dow's down 6, S&P's down 3. Await mode. Tomorrow at this time, we'll have a lot more. I'll be back.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
So this is really interesting. DHI, question about DHI in the den. That should be a new high. Yeah. A, B, I'm calling this C. DHI, this is D.R. Horton. This is in the housing area. Fabulous move, really good. In fact, I sent to my subscribers this morning, I sent the charts of the the housing sector, the Philadelphia HGX, and the wood, WOD, which is the iShares of the global forestry and timber. And they were both moving very nicely to the upside. And the question was, what waveform are they in? Well, DHI is acting extremely well. Weekly chart has a buy mode in place, and trading at 32.08, up 5 cents today. It doesn't sound like much, but after what it's done, that's a really nice move to the upside. And the monthly chart is improving a lot. Yes, I do like it. The big question is, what will happen if there's some kind of disappointment in the market? Will stocks like a DH Horton, especially since rates have been coming down, be impaired if, in fact, bonds become the favored vehicle? If the bonds continue to be the favored vehicle, you can see I'm doing 2 things at once, yields will come down. So the question is, what happens if for whatever reason there's a sudden spike in yields? Well, then I think DH Horton could pull back a little bit, but so far it's acting very well. So the question was, DHI cup and ladle, should I add existing position? I'm going to make a suggestion here that says, because we don't know what tomorrow's action is going to be, I have some ideas, but that's not good enough. I'm just going to say to you, rather than adding to the existing position, it's very good that in the cup and ladle pattern, the breakout here is very important. Oh, you know what I'm going to say? I'm going to say, because you've already got an existing position, and I'm preferring to call this C rather than alternate count E/C, you can add right now and keep that as a trading position at 32.09. But please make a 5% risk of $1, less than a 5% risk. Give it a $1 stop just for the next 2 days, and let's talk about it again on Thursday. All right? We're treating this as an add-on position, so it's going to impact your call by just a tiny little percent if you're taken out. If that's okay, yes, right here, even if there's a bit of a pullback, it should, I think, still make a D. If that D is very strong, we're looking at the candle of the weekly chart of the 26th of August. 33.26 was the high, 31.64, and at any point, if it can hold for a whole day in the 32.60s, this is a real good chance that it's going to test the high of 33.26 over the next week or so. It's a weekly chart, that's what I'm saying. So yes, your risk is very slight but keep your core position. Okay, I hope we helped you there. Next question was, so I did Boeing. This is a real mix in the PPA, which is the PPA is the pro shares, the power shares, aerospace and defense. This is a leg F. The weekly chart is still very strong. The monthly chart is still strong. My contention is that at some point, I think this area is going to meet up with some kind of problem simply because, and this is not an instant restart on PPA, simply because the cost cutting is going to be very important. I think to assert his philosophy, I think President Trump is going to say, yes, you're going to get business, but you're going to have to show me how you can cut costs. At least this is the early stage. Eventually, we know that defense, they always manage to sneak in and squeak in higher and higher costs for whatever it is. But I think that's going to be the bugbear. So we might find that, yeah, power share is great. You've got a defense-oriented president, and all of a sudden, it doesn't act like it did under the non-defense president, although obviously he turned out to be the defense president. Okay, so that's that. Now, defense. Let me go back to what I was looking at before, and that's the XLP. Did I even get to? Oh, I didn't do it during. Yes, I did. So this is AB. This is leg B in the weekly chart. Very strong. Gosh. You know, I used to have the components. This is the S&P Select Consumer Staples Spider Fund, and a rotation. Is that the same? Let me just look at this. You know what? I'm not going to be able to do it now. Yeah, I can do it now. Let's just do it right now. So here we go. We're looking at XLP. Is that what you said? Yep, XLP. XLP components. I used to know these so well. I just haven't looked at this one for a while. I meant to, because I spoke about it the other day. In fact, in that talk that I gave, it was one of the things I spoke about. So components, don't do this. It's one of them that just doesn't give very quickly. That's not the one. All right, holdings. There we go. Holdings. Oh, Procter & Gamble, Coca-Cola, Philip Morris, Altria, Walmart, CVS, PepsiCo, Walgreens, Costco, Colgate, Mondelez, Kraft, Heinz, Kimberly-Clark, Reynolds. Oh, man, the works. General Mills. So I had General Mills, and it was on my list as a potential buy for my subscribers. But I wanted to see how it held support, and it's still not holding. So some of them, look at this. GIS, General Mills, up 47 cents, but had a big smack to the downside yesterday. And yet Procter & Gamble is trying to make new recovery highs. The high at 93.89 made in December of 2015 is within 2 points. I mean, that's amazing, right? So, all right. So what's the question? The question is time to move into defensive dividend play stocks. That's what I was talking about the other day. I prefer to be looking at dividend stocks that have the potential, I'm saying the potential, but the potential to have capital gains as well. So yes, I think it's an area, but are these a little overbought? I would much prefer to see a pullback. I'd like to see Procter & Gamble into the gap between below 90 and above 88, somewhere in there. I'd like to look at it again, especially as if leg B in the weekly. Yeah, so the answer is yes, but it's a little high. So we've got Bank of America next call. Oh, yes, I'm sorry. I didn't see Rick in Denver. Oh, I'm sorry. We didn't have calls for so long. I didn't look down. Rick in Denver, you want to... So Bank of America is right in the category now of slightly XLF, slightly overbought. We've gone to a D in the XLF. I think we're going to get a bit of a pullback here. It's not really big price, but it's more time and some price. So I think Bank of America goes into that category. And then I think there could be a nice run to the upside, but it just needs to consolidate a little bit. I really apologize. Rick wanted to know. Sorry, Rick. I was trading at $2.99, up $1.13. Now, this is a big move. I've got it as a leg D, but we were short. We took a less than a 1% stop on it. The other day in the 291 area, 292, and now it's at 299. And this arch formation obviously is not working yet. It's going straight to the resistance zone, and it might even take it out, and then goes to 301.80. So let me see. How am I going to do this? If, Rick, you're able to call, I'll be watching real closely, and my apologies for not looking at it earlier. And I will get to this. I'll do something with the IBB in a moment. In the meantime, there were a couple of other questions that I had.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
So the question was IWM, and this is great. I got it on two. I got it from the Den, and I got it from the in a slightly different way from an email. Dow, with negative interest rates around the world, the Dow, is on the biggest winning streak since January of 1987. Would you short the IWM? So let's do this. If there was a relationship just right now, I would say that probably if you had a long Dow, short IWM, that's probably one of the ways to go. I'm not, how can I put it this way? I'm not very negative on the IWM. I think it's in a trading range. This is the Russell 2000. But the Den statement was, hey, how about we go make no new high this week, and next week we just modestly go to 140.33 or a little higher for leg D, and then finally you've got everything, all the key indices in leg Ds. And then we start turning down from next week. Yeah, I think in March, I think we're going to have a consolidation in March. That's my thinking right now. Unless tomorrow there's some news, and the next thing you know, you're at 21,050. That's completely different. But I think 20,000 Millennium was the slice through like a hot knife through butter. 21,000 is going to be much tougher. I believe we will go there, and then we're going to chop, 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 and eventually break to the upside. I'm working really hard. I've got a whole new template based on my 1929 chart match that I've been looking at. Remember, we did this last year at exactly this time. I said we're looking at it on a weekly basis, and that's kind of what I'm still doing, okay? Now, let me just do this. So, just wanted to, okay, now I've checked everything. Here we go. Within the context of markets, this is what we're looking at this particular point. The VIX index is up. It's up 16 at 12.25. It's made a very nice move from 10.30 to 12.25, 2 points, 20%. Hey, that's a big deal. It's not a big deal if tomorrow at this time the VIX is trading at 11.76, the 9-period moving average, instead of 12.75, 13. I can just make this not as a blanket statement, but it's a statement based on a tremendous number of years and intense work on the volatility index. If the volatility index starts to trade in the 13s, you will see a deeper correction. You won't just see a pullback of 200 points and then chop to the upside and then slightly lower. If it starts to hold in the 13s, especially with so many stocks, key stocks in this area, in leg E to F, I would say be real careful. That's all. Watch the volatility index. 13s, it's holding the 13s, IBB. So I have to make a decision. I'm probably going to make it tonight, whether or not the IBB has made a leg D. It's gone to resistance in the dailies. It's gone to resistance, even though it's only gray leg C in the weekly chart. It is under the previous hour, 301.80. It is in the resistance area that's constantly been a source of trouble, and it's going to have yet another H pattern pullback. I don't want to just anticipate. I want to hear what the president says, because I think in a way what you're looking at right now is the hope that there's some relief for the biotechs in relation to the cost pricing. Product pricing is really important. My thinking is that it's still an area that's overbought on a fundamental and technical level, and that at some point we will break 240 support, start our way down to the 220, 200 area. That's my thinking. But I'm going to let it play out. So I'm sorry. What I would have done, Rick, is say to you, I need to see a down move from here to be able to get my peak D in the IBB, and then to be able to gauge the 120-minute chart. It's still acting quite well. I don't want to get into this too early. 1% risk, fine. But I would rather be playing it with the BIS 300% short if I think I'm going to short. Holding off, maybe we can discuss it again tomorrow. So thanks for being here, folks. Have a great day. See you tomorrow, and we'll see what the president says tonight, how the market reacts. It's not what he says, it's what the market does tomorrow. Have a great day. Stay tuned.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.